Hi guys, and welcome to my series on the blockchain called Kingmaker, taking you from zero to hero in the blockchain world. By the end of this video, you'll see why I think it is quite possible that Bitcoin may eventually be worth over $10 million each. Does that make it worth watching? I don't know. Today, we're covering cryptocurrencies anyway, and watching this video to the end will give you a comprehensive overview of what's going on in 2018. Today, we are focusing on the digital money side of the blockchain, and again, in a customer-centric viewpoint rather than the traditional technical approach to blockchains. Let's get straight into it. So last time we talked about blockchain being a platform where you can deploy, you can manage, and you can transact with digital assets. We said that digital assets were computer files such as films like you'd get on Netflix, and a blockchain platform enables you to transfer ownership of that asset to another person as well as do other sorts of transactions. We talked about smart contracts in that context that were mathematics-like rules you could employ to make conditions about how people use your asset. We also mentioned that if you wanted to sell an asset or allow someone to use your asset, you may want to exchange it for money, and that is where blockchains often have their own type of money, which is usually tied to that specific blockchain. We are going to explore that today, and we'll start with exactly what is cryptocurrency. Let me tell you exactly what a cryptocurrency is. It is nothing more than a digital asset that someone creates and puts on the platform. In many cases, the blockchain creator produces the cryptocurrency at the beginning of the blockchain, its genesis, if you like. And does that sound unusual to you? Yeah? Well, it's not at all. What is a banknote other than a token someone creates that represents a unit of value that someone else is guaranteeing? Cryptocurrency makes it impossible to create fake money, way more so than banknotes or gold coins, for example. For this reason, you and I can rely on the fact that if I'm given a unit of cryptocurrency, like a Bitcoin, you can guarantee that it is real and no one can steal or copy it. I expect you'll have heard of Bitcoin. Bitcoin is a cryptocurrency and it is used like any other currency. Bitcoin is kind of like another country's money. When I go on holiday, I can buy Bitcoin in pounds, euros or dollars from an exchange like Coinbase instead of a travel money shop. Now, we could go into the technical way Bitcoin works, but it's really not that important to the user-centric approach that we're following. Let's just assume that it does work, and to this day, it has. I know you've heard some horror stories about hacking, but honestly, Bitcoin itself has not been hacked yet. This is why, once I give you a Bitcoin, it does not devalue based on things like replicas or fakes or even oversupply. Right, let's get into a quick discussion on what everyone is probably interested in, the value of Bitcoin. You have to ask yourself why Bitcoin is worth anything at all. It's a kind of made-up money, so why are people even bothered with it? The answer to that is not very easy at all. It's been an organic growth in its value, which defies logic in many ways, but it lies in the expectation of its future value. When Bitcoin first started, the expectation of future value was high. It was replacing regular currency with something which cost nothing, a zero transaction cost, as no banks were involved. This meant plenty of people were willing to purchase Bitcoin. Then people started to realize it could revolutionize many industries through its speed of transactions and its low cost. So people bought it expecting it to be even more valuable in the future because it will be used by businesses to reduce their costs. Then it captured the public's imagination thanks to companies advertising Bitcoin in magazines, newspapers and social media. More value was added, and this is, in my opinion anyway, what caused the December 17 peak of up to over $19,000. Today, the value of Bitcoin has become almost self-sustaining. The new liquidity, plus people using to buy stuff and hopes for the future, make it readily exchangeable. And while people are willing to buy and sell, it will maintain a value. But that value changes up and down and rapidly, and we should look at why that occurs. And it is to do with how Bitcoin is created and controlled. Now, my home currency, the Great British Pound or GBP, is controlled in its value in part by the UK government. The government can increase interest rates to reduce the money people spend by making everything much more expensive, and decrease interest rates to increase spend by making money easier to borrow. This is it's a very naive explanation, but it serves my purpose of how governments control money. Now, conversely to the pound sterling, Bitcoin has no government control in its value. It is purely market driven, which means that if it is in high demand, the value goes up, and if it's in low demand, the value goes down. But why would demand change? And I think the answer comes down to two factors, really. Short-term speculation and potential long-term value. Short-term speculation is rife. While the price can rise 10 or 20% or more overnight, there will always be people willing to bet on it. If you look at all of the YouTubers with large numbers of subscribers, they are discussing impacts to the price of Bitcoin and other alternative currencies. This should tell you a lot about what interests people, particularly in crypto. When an announcement is made, such as America's financial regulatory body saying that Ethereum is not subject to securities rules, then the price of Ethereum goes up significantly, double digits in percentage terms. And then when news is announced that Bitcoin's price might be manipulated, the price versus regular currency goes down, also by double digits. It is truly a gambler's dream. I mentioned before Bitcoin to 10 million. Most interesting to me is long-term value. But how can Bitcoin have long-term value? And you need to think about it in this way. In the UK, the value of the British pound is equal to all of the assets that have been bought with British pounds. This is the total circulation of the money, not just the banknotes, but all of the British notes or British pounds that have been or that exist today in banks as well. The number of British pounds goes up in a couple of ways. Not the price, the actual quantity. And the first of this is through fractional reserve banking systems. Basically, banks create money through lending money that isn't theirs and claiming back the original loan amount plus an interest payment. So a loan at £1,000 at 6% will create an extra £60. It's not as straightforward as I'm making out, but at least you can understand my drift. Secondly, the government directly issues new money through the central bank to stimulate spending, and this is called quantitative easing, and it's been a staple activity to get us out of trouble since 2006 financial crisis. Now, this increase in circulation causes the British pound to go down over time. The more money in circulation, the easier it is to obtain, and therefore pushes the value negatively when paired with other currencies. Now, with Bitcoin, this is really different. There can only ever be 21 million Bitcoin, ever, due to the technical way Bitcoin works, the math behind it. This means that all assets purchased with Bitcoin have to be bought with only 21 million Bitcoin, and this is where long-term value is, in my opinion. The value of Bitcoin is directly related to the total asset base bought and maintained in Bitcoin. What does that mean? Well, let me give you an example. If there was only 10 Bitcoin and 10 Bitcoins bought a £1 million house, then each Bitcoin is worth £100,000. Got it? If there are only 10 Bitcoins, but you could buy 5 houses worth £1 million each, then each Bitcoin is worth £500,000. Today, they are around 17 million Bitcoin, but expectations are around 2140, we will see all 21 million Bitcoins in circulation. Once that occurs, and if the planet has adopted Bitcoin as its only currency, then that 21 million Bitcoins will be worth all of the money in the world. Let me put it in a different way. If you own 1 Bitcoin today, that will be worth 1/21 millionth of the entire value of the Earth in 2140, assuming only Bitcoin exists as a currency. Now, that is a lot of money. Of course, 2140 is a long time away, but the principle remains the same today. We can actually put some numbers on it. all we have to do is assume that an entire market is bought and sold in Bitcoin. Let's assume Bitcoin was used to buy all real estate property, houses and the like. 21 million Bitcoin will be equal to the value of all of the property on the planet, which is about $217 trillion. And that would make each Bitcoin worth around $10 million. And that is just if Bitcoin is used in real estate. So, is it worth buying Bitcoin? The answer is yes, if you think more people and markets will adopt the Bitcoin currency. Will that happen? Well, we have to figure out how to get there. And of course, it's not as easy as that. If it was, all Bitcoin would already be worth $10 million because people would buy it knowing that it will get there eventually. We need to determine what the challenges are in adoption and figure out whether these can be overcome. And if so, what time frame? So from now to 2140, what has to happen to make Bitcoin a market currency and shoot its price to the moon? The largest issue, in my opinion, is that economies are based on an existing banking system. Screwing up a banking system screws up an economy, which screws up everything. Established practices such as the fractional reserve banking, quantitative easing, taxes, interest rate control, makes the economy go round. And by completely replacing that with a cryptocurrency that has no government controllability will wreak havoc. We simply don't know what will happen. The only way that we can safely replace the current system is with a coordinated government intervention. When that actually happens, the doors will be open to a major flood of blockchain-based currencies. At this time, there are a number of countries, major countries, that realize this problem and they've banned or otherwise restricted cryptocurrencies. It's honestly not worth mentioning which ones because the law changes so quickly in this game. What's illegal this week is often legal the next. It really does change that quickly. Now, one can understand why the rules change so frequently, as countries are learning how to deal with them, and this probably contributes to the high variability exchange of the cryptocurrency. Now, probably the least important issue then is that technology isn't quite ready yet. Bitcoin's main blockchain can only process around 3 to 5 transactions per second for everyone using the blockchain. Yes, that is everybody in the world. But there are many, many solutions to this in the pipeline to fix it. You have Lightning networks that are practically unlimited in speed. The Casper project changes how Bitcoin transactions are agreed, makes it much quicker, and so on. It will get there if it hasn't already. Other blockchains are being developed regularly that test these new technologies. It is entirely feasible that Bitcoin adopts a technology that other solutions trial and find works. Or, of course, those other cryptocurrencies are based on better technology could entirely replace Bitcoin. Competitors include EOS, Ethereum, Neo, Litecoin, and even Bitcoin Cash. It's a different form of Bitcoin. There are a couple of other types of cryptocurrency that are worth mentioning before we wrap up. Not all crypto is there just to replace today's fiat currency. Some actually have value built into them. An example of this is Ether and EOS. These cryptocurrencies, as well as being methods of exchange in themselves, so value exchange, are also used to power smart contracts. You spend Ether to execute your decentralized, safe, smart contract. So some currencies have intrinsic value, that they're worth something without them being monetary. There are also these things called stable coins, which are cryptocurrencies that somehow are linked to existing assets to stop variability in their price. USDT, or Tether as everyone knows it, is matched to the dollar. So $1 is equal to 1 Tether. You may have also heard of blockchains and therefore Bitcoin, and they're not private. They have these sort of issues, social issues. Every transaction is public, so your mum can tell if you're buying too many cakes. And this is definitely true and a problem, but we have systems like Zcash, Dash and Monero that are built to hide your stash of cakes if you've just bought them. For every problem, there is a solution, and it's just that they're not into one big mega coin yet. But again, it will happen. Right, now we have covered a lot today, so it's time we actually wrapped up. And I hope what you take away from this is that the cryptocurrency world and cryptocurrencies are nothing but a digital asset that is placed on a blockchain usually. The value of a cryptocurrency is based on expected future values rather than the real value today, but it is linked to a market capitalization or how many people are actually using the coin to buy stuff. So knowing what affects that coin's reputation and therefore future value, plus understanding who uses it today will tell you exactly what the price is going to do, if you can figure it out. Bitcoin is the main cryptocurrency today, but there are plenty of others that solve technical problems with Bitcoin, and they may become valuable, more valuable in the future if Bitcoin is not successful. And that is about it. I will see you next time, and we'll talk about some of the use cases of blockchain other than currency provision. So, see you soon.